gold and silver have to be suppressed because they don't want the public to own it, because that truly is invisible. It's outside of the system, and it has the broadest base of buyer. So it doesn't ever go
to gold and silver. The key thing a lot of people are waiting for is sort of a Fed pivot. Like if the Fed were to pause in increasing rates, everyone thinks that's when everyone will start anticipating gold and silver will go up, because the next move from the Fed's going to be down to stimulate the economy or get us out of the depression that's coming, right? Start printing again, easy money's back. And the Fed balance sheet, the key thing here is like, here's the long-term balance sheet. The Fed printing, going through their process with reserves, of getting reserves into the system where the banks create the money, fund our deficits. So back in 2008, back before they were doing this game, we were less than $1 trillion. This was a couple $100 billion back here, 2006 to 2008. We had the great financial crisis. We got up to $4 trillion. We had COVID in 2020, and we're now at $9 trillion. They're starting to do this QT thing where they're slowly reducing the balance sheet, and everyone's just waiting. All right, when's this going to break? And then we go back to easy money. Where is the danger here? Is this like this goes to 15 trillion, 20 trillion? What's the next stage of this game here?
The real stage goes back to that confidence piece, because that's the only reason why this whole system is held together for this long anyway. And, the Fed basically gave up that forward guidance. So did the ECB. So did the Bank of England. I mean, the big global central bankers, they are not doing forward guidance anymore. And since you're talking about 2008, that's when they came in. And it was basically the Fed said jump and the market said how high. And they were advertising what they were going to do and giving Wall Street enough time to get into position to take advantage of that. And then all of a sudden, they kept promising 50 basis points, 50 basis points, 50 basis points, and they came out with a 75 basis point move, which may not seem like that much, but that was different than what the Fed had been telling the markets. And so that really key, important level of confidence was destroyed. And bank to bank was destroyed through the interbank rate in 2008. Central bank to central bank was destroyed with a Swiss surprise in 2015. And now Wall Street and the central banks, and now the central banks are coming out and saying, well, we can't give you the forward guidance anymore. So Wall Street is now operating blind. And when you talk about the pivot, how far down will they allow the real estate markets to go? Because now we are beginning to see price cuts. We have a lot more inventory on the market, et cetera. So how far down will they allow that to go before it gets too painful? How far down will they allow the markets to go before it gets too painful? And so they have that on one hand, and they have their credibility on the other hand. Because when you say, well, what is that number? I don't know that it's so much a specific number as it is public confidence, because that's the last thread that is holding this whole house of cards together. And they have to control the inflation, because the rapidly rising inflation makes it obvious to the public. And they even admitted they don't know. We don't know. We don't understand inflation like we thought we did. Well, they created the system with inflation built into it so that they could rob you and you'd agree to it because it was slow enough. But now it's happening really quickly. So, good that oil is pulled back and we see a little bit of relief at the gas pumps for the moment. Right. But I don't know that there's a number. They can't run off that balance sheet. You look at it again, they tried back in 2016. And then in 2018, things were falling apart. Everybody was trying to tighten and normalize so they would have some ramp room to lower interest rates to stimulate. They can't do it. It's done. It's done. I'm not saying they won't. I'm not saying they won't do. Oh, no, battery. This is what's going to happen to them. Oh, there we go. There we go. I'm not saying that they're not going to do that. They're going to do that because that's all they have. But when they do that this next time, which, who knows, maybe next year. I don't think they'll do it this year, but who knows? Yeah. That's it. It's the public confidence. And that's why, gold and silver have to be suppressed because they don't want the public to own it because that truly is invisible. It's outside of the system. and it has the broadest base of buyer. So it doesn't ever go to zero.
Very true. Very true. And I think a lot of people are sort of anticipating that as soon as unemployment starts ticking up, all these layoffs to different companies start showing up, as soon as we're officially in a recession where they can't even deny it anymore, unemployment's going higher. At that point, it's going to be incredibly difficult for the Fed to keep on the quantitative tightening. It'll be impossible to raise rates anymore. At some point, this breaks, and then all the political pressure shifts back to they've got to lower rates and goose the economy. I mean, they're not going to. Politicians, their number one priority is get reelected. So politicians are not going to keep letting the Fed do what they do. The Fed is not independent. If Nancy Pelosi's portfolio is going down, guess what? The Fed's going to go back to easy money. There's just no chance of.
Well, that's what makes it such a challenge, though, because when they do go back to easy money, first of all, it'll be interesting to see, they'll drop the rates back down to zero, maybe even sub-zero, maybe negative rates. But that's when you're going to see them 100% lose control of inflation.
Yeah.
Because they're going to be encouraging it. Just like this new act, it's encouraging the inflation because you're spending new money. It's not money that's already in the system. Right. It's already spent.
Yeah.
So this is critical. I mean, that's when we go into the real hyperinflation.
And that's when gold and hopefully silver, we're not rooting for all this to happen. We're sort of planning just because it seems like it's inevitable. But that's, I think, when gold and silver launch, when the confidence is gone and people are.
I think, Jim, that if you're counting on the Wall Street spot market to give you an accurate opinion of the true value of gold or silver, then you're going to be holding your breath because it's nothing to suppress it. So we'd have to look at the black market, there'll be just like it does in other countries that are going into hyperinflation, and those governments maintain the rates and they maintain, the value of gold and silver, suppress it. And then, even as the black market is showing the true value. So maybe in this country, because we're so large, maybe that will show up in the premiums. I mean, it's already showing up in the premiums, isn't it?
Mm-hmm. Oh, yeah.
Okay.
Yeah. So $9 or $10 premiums for American Silver Eagles. It's crazy.
And yet, you're looking at silver on the spot market, you see? So those premiums are already telling you this is not a real market. You can't count on Wall Street.
Yeah, exactly.
And, I focus so much on gold because it's the primary currency metal. So when they reset the currency and they do those overnight revaluations, they do it against gold.